BlackRock controls more money than the GDP of most countries on this planet. So when the world's largest asset manager quietly shifts more than $2 trillion in exposure, this is not a routine adjustment. It's a signal. Because smart money doesn't react to crises. It positions before the world realizes something has changed. And the real question isn't where the money moved. It's what BlackRock is preparing for. First, let's clear the noise. BlackRock did not wake up one morning and pull $2 trillion out of America overnight. What actually happened is far more strategic, a gradual but massive reallocation away from traditional U.S.-focused public markets and toward global, private, and alternative assets. This isn't panic. This is planning. The U.S. debt keeps rising, and higher debt always means higher long-term uncertainty. At the same time, interest rates remain elevated, squeezing bonds, real estate, and heavily leveraged companies. For everyday investors, this feels confusing. For institutions like BlackRock, it's a clear risk equation. When protection becomes expensive, capital looks for safer positioning elsewhere. That's exactly what's happening. Another major shift is happening quietly. Money is leaving public markets and flowing into private credit, infrastructure, energy projects, and long-term assets. Why? Because private markets offer steadier returns, more control, and less exposure to daily political drama and stock market mood swings. Big money prefers environments it can shape, not just speculate in. If this update is helping you understand what's really going on, hit the like button. It tells me to keep these updates coming. For decades, global growth revolved around the U.S. That world is changing. Growth today is spread across emerging markets, energy hubs, supply chain rebuilding, and massive infrastructure projects outside America. BlackRock isn't abandoning the U.S. They're hedging against a future where growth is more global and less concentrated. This move doesn't mean America is collapsing. It means volatility is rising, protection is costly, and concentration risk is dangerous. When trillion-dollar players reposition early, it usually means the next decade will look very different from the last one. By the time most people notice the shift, the biggest institutions are already set. That's how capital wins. If you want clear, no-hype breakdowns of what global money's really doing, like the video, subscribe, and drop a comment with your thoughts. This is Global News Pulse Daily, and I'll keep explaining